Welcome to this week's Hidden Money podcast episode. Kevin and I hear all the time, either from CPAs directly or more often through clients that have come to see the light. They say wrong things, and it's gotten ingrained into our clients and too much of the taxpaying world's head that these things are true and they are not. We want to change the way you think, and Kevin and I are excited to have a podcast focused on, do you hear these things from your CPA?
Because there's so much misinformation floating around. I mean, you can scroll TikTok, you can scroll whatever you want and get tax advice, but we are actually talking about, do you hear this from your professional, your CPA, your licensed CPA? They even say some things that we're like, hold on. And they ingrain that on the client.
They're certified professional accountants, and I feel the same way. I go see any doctor that's got MD by his name. I'm like, okay, at least I'm with a doctor. That's fine. But I've learned not all doctors are created equal. It's the same with CPA. It's the same with every profession. I have this mantra, and I believe the word or the acronym CPA is better suited to stand for could not pass again. Does not mean you're an expert. We've met some really challenged CPAs that don't get it. We've met some non-CPAs that are incredible tax strategists. So, yeah.
It's like if you go to a doctor going with that kind of line of thinking and you're diagnosed with something severe, like you're diagnosed with cancer, most everybody's going to get more opinions. Just because one doctor says it's so, you want to get more smart people in the room to diagnose and all come to an agreement. We said this a lot. It's the same with your financial situation. If one CPA says, yep, you're making $1 million on a W-2. You max out your 401k. Off you go. There's nothing else you can do. Nothing more we can do.
Yeah.
Well, how about this? Just from that standpoint, SALT cap just changed. The Tax Cuts Job Act went into place in 2017, and we got upped. We got a lot of things improved. Some things not, but in my opinion, I think this One Big Beautiful Bill Act is tremendous. If your CPA is not caught up on that and they say there's nothing we can do, it's false, because even just by running your life normally, by buying food, groceries, paying state tax, those things, you can actually calculate your sales tax now and get above that 10K SALT cap on your Schedule A deductions just by tallying up some sales tax you pay through the year. That's just one small thing you could do. And some CPAs may just be like, I don't know, there's nothing you could do. And it's not true.
We hear that all the time. Quick intermission on this, or interlude. So Kevin and I were trying to figure out what this episode is going to be about and kind of outline it before we started. And it's been a long day. And turns out our studio has a bar. And Kevin has made us a couple old fashions. So the set's changed a little bit this episode. So don't let that distract you. Focus on what
we're going to get better advice this episode.
We should. It is only our first and only bourbon tonight. So you hear bad advice from other professionals. In a lot of cases, like in the medical field, you know that you should go get a second opinion. In our field, too many people just trust their CPA. I see this happen all the time with lawyers too. A lawyer said, I'm sorry, I have no case. Or, you know what, you should just settle. Even if you know it's wrong, you should just settle. Don't just settle for bad tax advice. Please don't. So Kevin, what are some other things? So we already heard that. Well, that's the big one, right? You're a W-2 taxpayer. If you've maxed out your 401k,
do some itemized deductions.
You got your itemized deductions. Maybe double dip in your real estate tax this year. Now that we can again with the SALT limit change. That's it. That's what they tell you. That's all you can do. The more money you make, the more taxes you have to pay. That's how it is. That's how it's always been. Just be happy you're making more money.
That's pretty annoying too.
Gosh.
Or, hey, it's a good problem to have, isn't it? Yeah, you still said I have a problem. It is a good problem, I guess, to make $1 million and pay $370,000 in tax. I guess that's a good problem.
It's better than other people's problems.
But are you going to solve my problem, or just say, "Oh, you made a lot of money. Sucks to be you"? No, that's not it.
So when you hear that from your CPA, are you asking them, okay, are you going to solve my problem? What are you offering here? If they're not offering you solutions, you're with a tax preparer, not a tax strategist. Go speak to a tax strategist.
We heard this just this past week when we were talking. We talked to a guy who's making significant money, and he's just like, it is what it is. I pay 35% in tax every year. It just is what it is. I hear that It is what it is.
He was so conditioned, he told us he was doing great on taxes. We asked, well, how are taxes treating you? He's like, great, man. I got some good advisors. Really? What's your tax rate? 35, 40%. In a state that only has a 6% top income tax, as a matter of fact. We're like, where is your savings there?
Yeah.
And we talked to this guy for 10, 15 minutes, but it had been so ingrained in this guy, he still thinks he's doing
And
fine.
he's talking, he didn't know us. So we met this guy for the first time. So he didn't know, he was like,
He's a really cool guy.
talking to two, we're not extremists, but we are so far on the other opposite end of him that we would look like extremists. Like, you're paying 35% of your income to the IRS. I was like, are you crazy? I just wanted to be that upfront with him.
You did say, I think, exactly that. He's like, what? I'm not paying 50%?
Yeah, that was his,
Well,
it's like
I mean, I used to pay 48 or something.
You get shot in the leg, you're like, well, I didn't get shot in the chest.
So then I tell this guy, we have this client does very similar stuff you do. They're making $2 million a year. They're paying 14% in tax. He's like, that must not be legal. That's another thing we hear from CPAs. If you're not paying your proper share in taxes, it must not be legal. That is hogwash.
Yeah, it's pretty bad because this is the beauty of the tax code, is that it is so complex. It is so just large. The quantity of tax code that is written, the agents that even have to enforce it in an audit don't know it. They have procedural manuals that they go down. And so there's a case for everything, typically everything, because the Internal Revenue Code cannot cover every specific situation that life throws at you. AI just came out. Think about all the new terminology that hit the dictionary, like skibbity and all this. Like, you're like, what does that word mean? It's now, these words are making it into the dictionary because kids are making it up. Life changes. Life is quick.
Yeah.
And the Internal Revenue Code can't always keep up with it. And so there's new products, new ways of making money.
Which reveals another one. I hear this, or people have told me they've heard this. No one wins in an IRS audit. Yeah, they do. Audits are not the problem. Audits are opportunities to prove that you're not cheating. Audits are not things to be fearful of. Audits, when you get audited, it probably means you're stretching the tax code to fit you perfectly or quite well. People win in IRS audits all the time if you're not cheating.
Yeah, don't be fearful of the audit for sure, because there's some CPAs that say, oh, we don't want to take that, it's going to draw too much attention. Or that's a red flag. We don't want to do that. That's a red flag, like home office deduction. And you've heard this several times. I mean, we both hear this. You hear it sometimes more than me, because I hear it. You come into my office and you're like, you will not believe. We have clients that actually are owed and have incurred legal tax deductions, and their CPA either veers them away from it because it's too aggressive and it's going to draw too much attention to it. And we're like, what is this line of we just can't get behind that line of thinking where we would not take a deduction because it's going to draw attention.
If it's a legal deduction they're entitled to. That's
crazy.
Like saying, I'm trying to think of a funny metaphor, but that's like saying, I'm not going to go eat that ice cream that's in my freezer because it might cause someone to freak out because they see me eating ice cream out of my freezer. I mean, it just doesn't make any sense. That was a bad metaphor. Sorry. I'm trying to think. I don't know how to come up with reasonable analogies of what these people are saying. Like another one is, well, you should always pay a little bit of extra tax every once in a while.
We've heard that. Yes.
You should always pay a little bit of extra tax every once in a while to stay off the IRS's radar.
What?
Where is this coming from? That's not how it works.
That's not how it works. They're not going to say, oh, well, he tipped us that year. It's like, what? You're literally tipping the government. They're turning their little iPad around, you're signing and tipping them 10% because they're doing such a great job.
That's like saying I have this landscaper, yard guy that does a terrible job, but he's kind of intimidating to me, so I'm just going to overpay him once every few months. So he continues to do my lawn terribly.
That's a good one because
I get better.
I forgot that one because I've heard that one too. Is like the only way this makes sense, and I'm trying to play devil's advocate for some whatever weird reason. But like if you had kind of an LLC that you were running that it was kind of a hobby, kind of not, or you're kind of toting the line of hobby loss rules, There might be a case to showing some profit that year because we don't want them to disallow this LLC, these expenses.
Rarely, though.
But gosh,
I mean,
I've done that once in my career. One time where I ran it and I ran the analysis, the risk assessment, I got with my client and saying, hey, if we keep taking losses on this business, they're going to kick this out. Or you're going to get
because the tax benefit was outweighed by the potential cost of an audit. And in those cases, you should do that. But if you're foregoing a $20,000 tax benefit, I mean, how many hobby loss audits have you experienced winning with our clients, or at least seen with our client base? If they're in a profit motive, I don't care what the IRS says. If they made losses 7 years in a row, 12 years in a row, if they have a true economic intent to make profit and they're trying, it doesn't matter. You win those cases every single day. But you do hear from from CPAs all the time, well, you better just pretend there's some profit once every 3 years.
No. If there's a business and profit motive and you have a loss every year and you're actually genuinely trying to make money in this business and you just can't for 3, 5, 7 years, that's okay. We had a client, and this is very typical in software. He was making millions of dollars of net operating loss a year with R&D, with all of the stuff they're doing. Significant capital being poured into this product, didn't show a profit. I don't even know if they're still showing a profit, but it's been like 7, 8 years of NOL loss, and that's all they're. But yeah, it's legit loss.
But they're very likely to make a lot of profit one day, and we haven't had the IRS ask about that. I guess they're used to seeing in quote unquote 3-year high corporation. But yeah, there's no way that the IRS would be able to challenge that and win.
Paying more tax than you're legally obligated to pay is a crime. And here at Revo Taxpayer Advocacy, we are here to fight for you. We want to make sure that you don't pay that dollar more in tax than you're legally obligated. Mike and I want to meet with you personally. And if you go to our website, revotaxpayer.com, and you click the button, schedule a consultation, we want to offer a free consultation for you where we talk about your situation and get to know you, and then we can advise the best next step. So it doesn't matter what's happened in the past. You can change your facts today and have a better tax outcome in the future. So revotaxpayer.com, we'd love to hear from you. All right, back to the episode.
When you hear these generalities that you just can't do something, you can't ever do it, most likely you should get a second opinion. Sometimes they're right, but rarely.
I think like the term "you can't do this" is a bone for you, like as a dog.
That.
It's like if you can't do something, you just write it on, throw it in Mike's office, and he'd be like, "I can't do something." It's like a challenge. It's like we can do something.
Depending on your fact set, maybe not. But there's always a way. There's always a way around tax law, and that's what I love about tax law. Too many people get so stuck, too many CPAs and tax attorneys get stuck focused on, well, this is how everyone said it should be done, so this is how we have to do it. Is that really what the original tax law said? Is that really what the committee reports of those in the Senate or Congress who wrote this law showed was their intent to make that law? Does your CPA even check those things? I bet you most of the time they don't. So there's also this continual argument that wins over and over again. What was the original intent of that tax law? And if the IRS is saying, hey, we say this because we're big IRS agents and we carry guns and we get to say that, and you better listen to us. If that wasn't the intent of the law, regardless of how many times they've gone through this and come up with their opinions, you have a really good shot at defeating the IRS if they come down on you on that. So.
Yeah, there's a lot of nonsense. But another thing that I hear quite a bit, and I can't speak to you right now. I'm busy. I'll get to you in 3 weeks. Just I got to get through that. Like getting a hold of your CPA is such a frustrating pain point for so many people. And I'm not saying like, hey, if you call me and want a meeting tomorrow, we have.
Especially since it's a tax season, right?
There is some generality. There is some reasonable expectation to schedule. Typically, our staff are going to return emails and phone calls within 24 hours, even if it's just saying, hey, I got your email. I'm going to look into this and get back to you within 72 hours, whatever it is.
But if you hear it over and over again for weeks, for months at a time, you just
Or they don't respond. So I've had several clients this year who saying, I've engaged my CPA. I haven't heard a lick from. I sent them my documents. I don't know where my return. I need you to take over the engagement, and they paid a retainer and everything. I mean, they might have like a Texas board case with this, but with us, we got to come in and help them. I mean, it is a bigger issue that I'm seeing more and more is CPAs getting, because our industry's so understaffed that they're just bombarded. Because what's happening in the current market is everyone in the country has to file a tax return generally. But our CPA industry, accountants, degreed accountants coming out of college, and the marketplace itself is going down. Not many people want to be accountants. So what's happened is you have the same demand,
Yep.
but the actual supply is going down of who can actually do that demand. And so CPAs are backlogged, and they're just so in the weeds they can't plan. So you may hear things like, I can't do this right now, or they just may not respond, which is communication and client service is so huge.
Well, I mean, it's also most good CPAs, most good accounting students, they get very focused on the details. And you want that in a lot, especially for compliance and doing tax preparation, you want the detailed person. That's what gravitated them towards that profession. That's what makes them good at tax preparation. But how many people do you know have explained or understand the axiom of getting lost in the forest because you can only see the trees in front of you and not the lay of the land, right? Mm-hmm. That happens over and over again in our profession. That's normal. That's common in our profession. It's not common on the tax strategy side, though.
Yeah.
So if that's what you're dealing with, find someone that can say, there is a way. Or do you hear this often from your CPA? The Internal Revenue Code was designed to help you, the taxpayer, the citizens of the United States, to keep more of your hard-earned money and not spend it on taxes so that you can grow the economy. If you haven't heard that,
I like that.
You absolutely should have, because that is the reason the tax code is written the way it is. It's not about loopholes. It's not about finding cheating options in the tax code. It's about taking the incentives that our government, our elected officials have created to help improve our economy, to give us the greatest economy in the nation. And America is that great country and is that nation. It's utilizing those. And what's the other one? What's the patriotic duty one? I'll let you say that one.
So it is our patriotic duty to actually pay tax. Because I'll be honest, I don't mind paying taxes. Do you know why? Because I like being in a country that has one of the most dominant militaries in the world. Are we the most dominant? I don't know. But I know that we're pretty strong and countries aren't coming over our borders and trying to invade us, and that we actually have some sort of strength and authority in the world. That comes with a cost.
Is it your patriotic duty to pay more tax than the law requires you to?
No. So
That was easy.
yeah, no, but I like paying tax in the way that I'm paying every dollar I'm supposed to. Do I think the government is stewarding my money the best way possible? No. I think there is so much waste and there is so much nonsense in government spending and accountability that I do not want to tip them to keep them off my back. They're terrible managers of money. So sometimes my legal obligation could be $0. That could be my legal obligation to pay tax. And if I can legally get there, I'm going to do it. But I want to believe in the systems that I'm actually paying tax into, and that's where I have to have faith that my dollar is going to be spent on infrastructure, that it's going to go to that it's going to go to the benefits of being in this country. I don't think we're there, or will we ever be, to where I'm like, okay, I actually want to pay more into these programs. I'm not going to voluntarily pay into Social Security. I'm not going to voluntarily pay into Medicare. I just don't believe in those programs. I think by the time I'm there, I'm probably not going to even get Social Security and Medicare, and I've paid into it since I was 13. I've had a job. So I've paid into these programs. I don't know what it's going to look like in 20, 25 years when I'm ready to pull on it. But I would rather invest my own money, and I can grow it a heck of a lot more than my Social Security is going to pay me out.
Amen to that. Here's another one. No tax deduction is worth the risk of an IRS audit. What? So wait a second. You have a tax deduction you're legally eligible to take. That is yours. You're choosing not to take it, meaning you're choosing to pay more taxes than you're obligated to pay because you're afraid of an audit. Okay, let's say it saves you $100 in tax. I'm with that. I can get my head
We
around
do that. We do that analysis a lot with clients. We're like, hey, we can take this position and it will save you $2,000 in tax. Your audit potential is going to go up significantly, or I don't have all my ducks in a row to defend this 100%. So it's a give and take relationship for sure. That's a good point.
When you get to the point where it's going to save you $100,000 in taxes, and it only costs you, if you get audited, which the likelihood is probably pretty low, even though it's a guaranteed red flag. You can have 8 red flags every year and not get audited. You can have a dozen. You can have 2 every year. Audits are not guaranteed just because you get a red flag, which is another one I think is a misnomer. But also, if that tax deduction would save you $100,000 and it will only take $20,000 to prevail in front of the IRS if they do audit you, please take the deduction, man.
Take a risk.
Yes.
And it's not even a risk, it's a calculated risk that in our job as CPAs is to provide you our opinion, our professional opinion, given our years of experience, giving our understanding of the Internal Revenue Code and how everything works. If we're in a gray area of the tax code, which we find ourselves all the time in, it's our job to educate you on why it's gray and where the position we would advise you to go to, and then your likelihood of passing an audit. If you're more likely than not to pass an audit and we feel that way, we will take a great position and not be at risk of losing our license. If we are blatantly like, oh, this is really skirting the lines or this isn't going to be right, I'm just going to push it through.
No, we don't do that.
I got a family to feed. I'm not doing that for you just because I don't want to lose my license and lose my career. So there are standards to do this, but the Internal Revenue Code is all gray for the most part.
I'm sorry, I'm still stuck. Sometimes I'm also a detail guy, you know? Well, it's not a risk, but it's a calculated risk. I mean, a calculated risk is still a risk. It's just better. I just had to throw in that in there.
It's like gambling and like, do I want to do slots? Do I want to do roulette? It's not that kind of gambling.
It's like, do I bring up $10,000 a credit card debt that's going to be 32% a year, or is it okay to buy a house with a mortgage? I don't pay 8% in mortgage interest a year, and the bank's value and ownership of that building is going to grow, but I get to keep all the fair market value. There's a big difference.
Yeah.
Okay. I think we could go on and on and on. The point is there, just because you hear a CPA say it, or just because your parents told you, your father told you, your mom told you one year, that's the way taxes are, that is not true. Please understand, the tax code is actually pretty darn fair. It's pretty darn reasonable. Not always. don't take that the wrong way. But it's pretty darn reasonable in most cases. And it is there to get you to save taxes, and by doing so to help promote areas in our economy where our country needs you to promote them. It's good to pay low taxes. It's good to follow the tax law. It is not good to pay taxes for dumb reasons that you don't need to pay them.
That's right. I mean, I don't know how else to say it better. If you hear something from your CPA and it doesn't sit right, listen to your intuition. If you're making money and they're not working for you and they're working for the government, being administrators for the Internal Revenue Service, that should be a red flag for you. You put red flags on your CPA if they're saying, we're going to withhold some deduction to keep them happy. If you're not seeing significant tax movement or strategy done all the time on your specific case, that's a red flag for your CPA. Audit them. Go, what are you doing for me?
Amen.
So thank you for joining this episode. We'll catch you next week with a new one, but it is tax planning time. It is end of the year. It is still not too late, but your options are dwindling. So reach out quickly if you are finding yourself in the situation where your CPA is feeding you these lies and this nonsense to you. Reach out to us and maybe we can help you out.